Hey, Bulls and Bears YouTube family. It is Sunday, February 20th, 2022. I hope all of you are doing well. And I was not going to do a video today. I was going to take the day off from putting an upload here on this channel, but there's a lot of news that we need to get caught up on, and I've got a pretty busy week ahead. So I wanted to make sure I get this out there. But the bottom line is, if you're one of the 70%, approximate 70% of Americans that are living paycheck to paycheck, things are about ready to get a lot more difficult. And I mean, rising cost of living, rising prices. So continue to brace. We've got a lot of news and articles to cover today, but let's go ahead and start right here. Recent NPR article, inflation has many retirees worried about outliving their savings. We've reported on this now for a couple years or more. Many people are coming out of retirement. They're having to go and take part-time jobs, in some cases, even full-time jobs after being retired. So think about this. You work for, in many cases, decades and decades, and you work to put away sometimes a big portion of your paycheck, only to find out that years later, what you thought you put away was a good amount is now nothing because the price and the cost of living and the prices have all skyrocketed. And see, this is the fundamental flaw of the money creators saying that always has to be inflation, that there needs to be 2% inflation for quote unquote growth. Well, when growth is defined as consumer spending and people taking on debt, well, that's not a good way to define the strength of the economy. So the whole concept of having an inflation target is flawed at the very beginning, because when prices are too high compared to what people are earning or compared to what people have saved up to retire, then there needs to be a correction or deflation. But see, that is not allowed to happen. The fact that the money creators are debating and having emergency meetings to discuss even raising the interest rate or the Fed funds rate even 0.5%, the fact that that's even happening should open a lot of people's eyes. But see, most people just don't pay attention. But more people are going to be forced to pay attention as prices continue to rise. Even people that I know in my circle here, family and friends, that never used to even think about these things or talk about these things, are starting to talk about the supply chains, the money printing, the debt, the low interest rates. So if there is a silver lining, maybe that is it. Maybe more people are going to start waking up and paying attention. And I think the more people that understand, what's happening here, it's going to be better off for everybody. So that's why I've always encouraged people here to not just share my videos, but go and talk to your family, your friends, let them know the real situation, that things aren't so rosy and not as rosy as you may see on the 6 o'clock news, where they're just talking about how great the stock market is and how all our homeowners are getting rich because of rising home prices. Well, even homeowners now, and I'm one of them, are feeling the pinch, and even more so because your taxes are going to go up, your energy prices are going to go up, your insurance costs are definitely going to go up even higher than where they are now. And I've spoken to people directly about these same things. And for example, there's people that saw their insurance bill double just in the past 6 or 8 years. Because when home prices go up and when the cost to build goes up, the cost of lumber, materials, labor, everything is going up, it costs more to rebuild a home. Insurance companies are on the hook for more to rebuild a home if something happens. So they're going to raise your rates regardless if you've had a claim or not. And people are starting to feel the pinch, right? Combine that with rising utility costs, rising taxes, and it's going to be painful for everybody. Unless you're in the top 10%, and you've got millions of dollars, you're definitely going to feel at least some pain in this. Speaking of rising prices, we've talked about how automobile prices have skyrocketed, and especially here over the past couple years, all of the supply chain issues, the chip shortages, the manufacturing slowdown and stoppage in many cases. The chip shortage is so bad that GM dropped heated seats in the winter. Now, heated seats, I'm sure that's a nice luxury, especially if you're in a cold climate. I remember living in Michigan, and on those freezing mornings, those winter mornings, starting the car and just trying to get the car warm before you actually had to go and drive it. You would start it, 10 or 15 minutes before you take off for your trip. and allow the windows to defrost and stuff like that and get it nice and warm. But I think a lot of people would drop these luxury features, like, for example, heated seats, in order to have a lower priced vehicle. And also, the more technology and gadgets like this and luxury items that you have, the more things there are to go wrong and break down. But we've spoken here that this chip shortage situation is not likely to get resolved anytime soon. And here's another indicator, the fact that GM is dropping certain luxury features because of the chip shortage. So expect car prices to remain elevated, and in my estimate, they're going to continue to go even higher, believe it or not. Expect higher prices for vehicles. Recent article, housing prices and interest rates aren't going back down, experts say. Well, I don't always agree with the experts, but this particular article, I definitely agree. Now, as I've mentioned here a few times, there are some YouTubers out there that are really like economic YouTubers, financial YouTubers that talk about the economy, the markets, etc. And more than one of them were predicting the housing market to start coming down in January because of rising mortgage rates. And here we are now, more than halfway through February, and it has not happened. In fact, prices are still rising. And I warned all of you that this was going to be the case. Rising mortgage rates are not going to be enough on its own to bring down home prices and to stop this housing bubble. Why? Because there's many other factors. It's not as simple as just pointing at one thing. Any channel or economist out there that's just pointing at interest rates as the only thing, you need to be very careful about who you listen to. And I'm not saying you should always listen to me, listen to everybody, but look at just what makes sense. With all of the supply shortages, the labor shortages, the rising transport costs, the rising materials costs, the fact that we don't manufacture enough items here in the US and have to import so many items, do you really think just rising mortgage rates is going to bring the markets down, the housing market? Also, look at all the foreign investors coming into the markets. Look at the institutional buying. I think our last video, we talked about another record quarter, the fourth quarter of 2021, for institutional home buyers. They have billions upon billions of dollars in liquidity available to go ahead and continue to purchase more real estate. So do you really think these hedge funds and mega billionaire corporate investors are so dumb that they're going to be buying homes when the housing market's about ready to come down? No, they know the housing market's not going to come down. And in fact, they're one of the forces pushing prices higher because they're coming in and buying a bigger and bigger portion of the homes on the market. If you want to see what's going to happen, follow the money, what big money is doing, right? They're not dumb investors. They know what's happening. Now, with the high cost of living and the high rents and home prices, more people are choosing to go to mobile homes and manufactured homes. The problem is a lot of these are on lots of land, most of them actually. I'd venture to say about 90+% of these are on land that's not owned by the homeowner. So they can actually raise your lot rent. Here's an article here, recent article, 5 reasons why mobile home park investing is recession and inflation resistant. One of the reasons that is because people that live in these mobile homes, they own the home, but not the land. So you can raise their lot rent, and it's going to be very difficult for them to move because they own the home, and it's not easy to move a mobile home. It's very costly and time consuming, and it's very difficult to move it, especially in bigger cities where you're going to be able to park that home. It's very difficult to find affordable land and where you can set up a new home on this land. So these owners of these parks know they can raise the lot rent, and it's very unlikely that people are going to actually leave the home because of the rising rent. So people are being squeezed wherever they go. The owners of these trailer parks, the owners of these properties, rental properties, they're being scooped up. These mega corporations are going to keep on raising rent. And when there's a housing shortage, when there's too many people, not enough houses, they know that they have the upper hand, they have the leverage. So continue for things to get worse as far as the cost of living goes. Now, I believe that there's always a bear out there waiting to pounce. Now, look what happened in 2020 with the health crisis. We saw a drop in the markets that was very brief because they came in so heavy-handed with the money printing, the debt creation, the rescue programs, just massive amounts of stimulus and bank support that they actually avoided a recession. On paper, a recession is 2 consecutive quarters of negative growth. So even though we saw about almost a 50% drop in the stock market, I believe it was 40+%, it still didn't get chalked up as a recession overall because money was sent out to people to spend in the form of stimulus checks, rent forgiveness. They put freezes on many different types of loan payments, and it allowed people to continue to spend. Therefore, the GDP, which is what's looked at as far as a recession, continued to stay in the positive. But what's the next surprise situation that's going to come up here? Will there be some sort of bank outage? Will the entire system go down? Will the debt markets freeze up? Or do the money creators have this market no matter what? Is it always going to be rising prices? That's the $1,000,000 question. Please let me know how you're preparing. I'm still playing both sides. I still have some cash in case we do see some sort of correction, some sort of a surprise shock situation that brings the markets down. Maybe it'll be a cyber event. Maybe it'll be war. Maybe it'll be new laws that restrict the banks from lending out endless amounts of money. But on the other hand, this thing could keep going longer than anyone imagines. And we could be seeing ourselves in a Zimbabwe, Venezuela, Weimar Germany type of situation here in the US, something that people thought would never happen. But I think most of you have been preparing for this anyways. So please let me know down in the comments. Hope to see y'all very soon in our next report. Thanks for being here, for supporting this channel. Big love to all of you. Bye for now. Peace.